In a sales update for the 26 weeks to December 2011, Massmart's total sales increased to 31.1 billion rand, representing a 15.2% increase over the prior 26-week period. Comparable store sales increased by 9.2%, and year-to-date inflation was estimated at 1.1%. Massmart's reviewed interim financial results for the 26 weeks to December will be released on the 22nd of February 2012. Tshepo, let's start with you. No doubt the 2011 Christmas shopping was a big contributor to the numbers in the sales update, but South African consumers are used to high-low promotions which last for short periods of time, and the likes of Hi-Fi Corporation come to mind. But Massmart's launched its third extended price cut promotion, which will last until the end of March. Now, certainly this will give their competitors more grey hairs, but is Massmart not instigating a price war?
I think everyone who was involved in the commission for the Walmart takeover, Massmart probably would have anticipated something like this coming through. But I think price competition, to be fair, is something that Massmart's historically done, so it's not necessarily something new that they're doing. And I think if you're looking at some of the other retailers, they're looking at diversifying themselves away just from fighting on a price basis.
Ashraf, I mentioned in the intro that year-to-date inflation was estimated at 1.1%. Give us an outlook for consumer spending in SA for 2012, and I'm sure you'll touch on, the inflationary environment as well as interest rates.
Just to touch on that inflation, it is for that specific period.
26 weeks.
The 26 weeks, and secondly, it's just for their basket of products that they sell. So, right. When people say, well, that inflation is significantly lower than CPI, which touched 6% in November, one has to realize that it's not like-for-like comparisons. But really, my outlook for consumers is a lot more bullish than the general market. I think consumer balance sheets have strengthened, and consumers have certainly saved a lot more over the past 12 to 18 months than what most of us expect. And now they're going out and spending, and we see it in Massmart's numbers. We also see it in motor vehicle sales. Passenger motor vehicle sales have remained strong. One thought that when it started picking up in March last year, that it would only last for 3 to 6 months, as it was just a replacement cycle, but it has continued.
Tshepo, I see you nodding your head in agreement. Are you as bullish on the outlook for consumer spending in 2012?
I think Ashraf raises some good points. Am I bullish on consumer spending? I don't know, actually. I think I'll probably sit on the fence on that. But if you're looking at the counters that will benefit from consumer spending, the retailers, Massmart included, I think the price is starting to reflect that a general bullishness in terms of market participants. I wouldn't say that the market participants are particularly bearish in terms of the outlook for retailers.
Tshepo, could you give us a sense of how local retailers, and in particular Massmart's competitors, are positioning themselves vis-a-vis Massmart, and what their valuations are looking like? I mean, the likes of Pick n Pay, Spar, ShopRite, Woolies, etc.
I think if you're looking at Woolworths, Woolies is a very different market. They target a different segment of the South African market, upper end. If you're looking at a Pick n Pay as another example, as one that's actually looking to diversify. Their strategy is looking to diversify away from just a price one, where they're looking at launching target stores for different regions, and looking to participate and take part in the consumers' spending via diversification. And I think you'll see a lot more of that going forward. I think there's this big fear of the big beast behind Massmart. So because of that, you'll see changing strategies in terms of South African retailers going forward, and I think. Yeah.
Ashraf, in December, the Competition Tribunal announced its conditional approval of 2 mergers by Massmart. The first was for Fruit Spot, and through this transaction, Macro will expand its fresh produce offering, and the second acquisition was of 16 Rhino stores by Mass Cash. What is your take on the acquisitions? Well,
for me, it's just them expanding their footprint, and what Tshepo mentioned earlier, the competition is certainly going to get more intense. And discussion I had today at lunch was Metro Cash and Carry. Previously, if you look back 10, 15 years ago, it was certainly a big gorilla. But with strong competition from Massmart, it's become a smaller and smaller player within this environment. And I think that's really what's going to happen, is you're going to see an increasing dominance coming from the Massmart group.
Now, does the approval of the Walmart Massmart deal suggest that more multinationals are going to be playing in SA territory? The likes of Tesco and Carrefour come to mind, but also Spanish retailer Zara, which is in SA. That created a little bit of excitement among fashionistas. But I'm wondering if their impact will be meaningful given the fact that they only have one store in SA at the moment.
Well, there's a second store opening in Durban before the end of April, I understand.
Spoken like a true fashionista.
And no, listen to my daughter. And there's a store earmarked for Cape Town as well, so, and that's before the end of June. So you've got stores in the 3 major cities, and I'm sure from there they'll expand, you know, possibly to opening a store in Pretoria, in Menlyn, if they find the right site. So I think you will see an expansion by Zara, and people need to remember that Zara did initially have a franchise operator in South Africa, but the group then decided to withdraw their franchise and actually open the store themselves. And that to me is a vote of confidence. You ask if that's an impetus for further foreigners moving into South Africa. I think definitely. There are those, they've taken a stake in this country, but a very small stake, and they see it as a launch pad into sub-Saharan Africa, especially Kenya and Nigeria.
Tshepo, this is a share that listed on the JSE in the year 2012, Rand 15. We see in quite a bullish trend line. Do you see this likely to continue in terms of Massmart share price?
Sure. On a PE of 44, I think it is currently. The value guy in me will say definitely not. I think from a valuation perspective, I've been saying this for a while, that Massmart looks expensive within an expensive sector. So from our perspective, it's one to stay away from the time being, so not hot.
Sounding like it's not hot for Tshepo. Ashraf, hot or not for you, Massmart?
Definitely not.
Definitely not.
At 150, I said it wasn't hot, but 20% higher, I'm definitely going to have to stand my ground.
Still 2 not hots for Massmart. Well, we're sticking with retail now, but we're moving on to Mr Price. Mr Price released a trading update today and reported sales growth of 15.9% for the 3rd quarter. Cash sales constituted 80.1% of total sales. Comparable sales grew by 12.5%, while selling price inflation was 4.9%. The group opened 17 stores and closed 3 since the end of September last year. So really quite an aggressive expansion strategy. They're opening up 17 stores and they're looking to go into online shopping. What's your take on that,
Absolutely, but
Ashraf?
year on year, their retail space actually shrank by just over 1,000 square meters. So just an interesting fact to it, because you're talking about 17 stores versus 3. They really closed 3 big ones.
And your take on the move towards online shopping?
I think in South Africa, that trend has just started. If one looks at Christmas sales in the UK and the US, where online shopping has happened for the last 6 to 8 years, then the trend has been very strong. In fact, if I remember correctly, in the US, it grew by around 35 to 40%. It still hasn't crossed the barrier of being more than 40% of sales, total sales, but it's certainly pushing that. So I think online shopping in South Africa is going to take a lot longer, and part of that has to do with the access to the internet.
Tshepo, let's come to the expansion strategy to Africa. No doubt you're aware of the strikes taking place in Nigeria now around the fuel subsidies, and they opened their first store in Nigeria in March 2012 rather. They're planning to do so, and that's the furthest away from their home market, and they've been battling to secure properties. Now, given what's happening now with the fuel strikes in Nigeria, do you think that they're reconsidering the move to Lagos?
Look, you have strikes all over the world, South Africa, case in point, the US for that matter. So I wouldn't necessarily think that one particular strike will affect their strategy overall. And given the noises that the Nigerian government has been making in terms of turning that economy around and making that economy tick, I think from a strategy perspective, I'd be more bullish in terms, or rather than bearish, in terms of their move into Africa. So no, I wouldn't think that Mr Price is going to pull back just because of the strike.
Well, you think overall they're going to be a success in Nigeria?
That's a famous... I didn't quite go that far. But I think it follows suit from the general strategy, which is where is growth going to come from. South Africa is likely to be growing at not much more than 4 to 5% over the next 5 to 10 years. And the fast-paced growth is going to come from the rest of Africa. So you want to tap into that. Whether Nigeria is the market for Mr Price will remain to be seen. But I think the general thesis of going into Africa to tap into this growth is the correct one.
Ashraf, let's just speak historically now about Mr Price's outperformance of the retail sector. What was behind that?
Well, part of it was the fact that they had a strong balance sheet to start with. Secondly, it had a low rating relative to the rest of the market. And I think when the sector started running, it was seen as the cheapest entry into the sector, and people started running for the shares. So that really caused the outperformance. But just one aside, I was going through Sandton doing Christmas shopping on about the 23rd of December, and I had 4 people walk up to me, dragging a trolley suitcase and asking me where Mr Price is. When I asked them where they were from Ghana. So, the brand certainly has presence, even though us as South Africans don't acknowledge it, in the rest of Africa. So I think a presence in Nigeria will certainly strengthen the West African branding for Mr Price. And
it'll go well for its geographic footprint too. Now, Tshepo, I just want to get your sense on the fact that 80% of their sales are for cash, and obviously this attributes to the fact that they're such a hugely cash-generative business. But how would they compare to the likes of Truworths, for instance, which has got more credit sales?
Look, I think as each individual retailer, you want to stick to what you understand and what you know. Credit sales, by their nature, can benefit you because they've got high margins, but can be quite painful if you don't manage that credit book well. So in terms of your underlying footing as a business, I think managing that credit mix is crucially important. And I think historically, Mr Price has had a heavy tilt towards cash sales as opposed to credit. So I wouldn't necessarily be expecting the company to be shifting that mix anytime soon.
Well, they've always had very stringent credit rating criteria, and that obviously augurs well for them.
It does.
In the interim results, they came out with a dividend of 93.6 cents, and that represented a 22% increase from the comparable period. Ashraf, has Mr Price always been such a good dividend payer, and what's the outlook for the dividends?
Not necessarily, but I think that the outlook for dividends is that they will certainly grow those dividends ahead of earnings, because, as I said, part of the reason for the re-rating was the substantial cash that they had on their balance sheet a year ago. And I think we will see more of that cash coming into the hands of investors, and that will certainly help maintain the rating where it is right now.
Now, last month they announced the retirement of Alistair MacArthur as the executive chairman with effect from the 1st of January this year, and his successor will be Nigel Payne. MacArthur is going to be taking off a cooling off period for at least a year, they say. I'm just concerned from the point of view of corporate governance what the implication of his return will be, and arguably the board wants to retain those skills as far as they can. But is it not just a corporate governance issue? Aren't we looking at objectivity and freshness of ideas for the board? Ashraf?
I think, look, Alistair's certainly driven this business over the last 10 years. I mean, Laurie Capini was the key driver until he stepped back 12 years ago. And I think, then Alistair was really just working behind the scenes with him, and then he stepped in and took over. So I think they'll carefully work that succession, and I think he will be in the background guiding the management team going forward. So I'm not too concerned about succession or governance for that matter.
Tshepo, do you work with the sentiment?
No, I do. I think what you want over time is to build a company that will succeed in spite of what management team is in place, and I think over time they've built that kind of culture and that kind of team. So I'd echo in those sentiments, yeah.
Well, gentlemen, now it's time to go for your votes. Tshepo, we'll start with you. Mr Price, hot or not?
Again, this is another one of those quality businesses. You should know when I start off by saying that. It probably leans to a certain direction. I think from a valuation perspective, there are far better opportunities in the market, so I'd say not hot. Not
hot for Tshepo.
Well, 21 times earnings, which is the part that worries me, because there are other retail stocks which I think with similar margins have a far lower rating. So right now I wouldn't think it's hot, but if that rating comes down to 12 times, I'd be a buyer.
Looks like you guys are joined at the hip today. 2 not hots for Mr Price, 2 not hots for Massmart either. You're clearly not liking the retail stocks.